Good morning, everybody. I apologize. I'm having some tech issues this morning. So please bear with me, and I apologize for this. Let me catch up here. I should be up here in a second. Bear with me, please. Very slow internet this morning, which is what's giving me the issue here. I'm not sure if anybody's got that issue going, but it sometimes seems to create some problems. And you know, this is one of the things about trading virtual currencies, or pretty much virtually. You know, when you can't get on the internet, what do? This is just a perfect example. Sometimes when technology is not in your favor, what happens? We are coming on. Take a couple of seconds here. Okay, we are live. Gold is trading 1830 last. And let me bring in here another chart, and I want to put the silver chart next to it. It'd be easier just to take a look at the two charts here. Let me put silver here. And we're off. A lot of volatility, obviously, as you can see in the market here, over the Globex, and coming down to what appears to be some buy levels here. Bear with me here. I want to double check the data for a minute. Just bear with me here for a couple of minutes. Let's watch the market at 1830, 31, in gold down about 630, silver 27.52, up 3.3 cents. And let's just watch the market here for the next few minutes. And let's see what where the market wants to go here. Let me double verify a couple of things. Thank you. We're getting a reversion on the metals here from what looks to be the levels by 1 and by 2 here. Bear with me here. I want to verify the data, as I've had tech issues here this morning in updating the data. And, you know, this is a perfect example of, if you're trading currencies, in which I am, you know, we're trading virtual assets. It can be really nerve-wracking when the internet doesn't go, or your computer doesn't work. So it's a perfect example of what one needs to do, which is obviously to have a lot of backups. Just double checking here the data. Okay. Let me verify silver here. 27. Yeah, we're looking at the right data on the charts, which is good because I wanted to focus on the reversion that it's unfolding here. As you can see on the left of the chart, you're looking at the market in gold coming down to the low 1818. 1822 was activated by 2, and by 1 is being activated as we speak right now. So major reversion is occurring in the metals here. Silver it did not quite come down to the buy 1 level of 27.14. Now, if you're trading in the futures contract, the signal that has been activated on the low side is in gold in the futures contract for day traders. It doesn't mean that it's changing the trend of the market in any way, or up or down. We have simply come down to an extreme below the mean in the gold and activated a buy trigger from 1822 and 1829. Silver is up 4 and has found buyers at higher levels. At higher levels. Let's watch the market here for a little bit. The target for the signal here in the gold is 1838. Silver reached, I think the average, the mean here, 2757, 67, 2767. I'm sorry, the average is 2757. Looks like the silver market here is leading the way on this rally. If you went to the market from 1822, obviously 29 was an initial place for you to take a profit. If you had multiples, obviously it was a place to unload some of it. And then as the market traded above again, 1829, then obviously you can add multiples. And the target 1838 is where you can unload the pretty much all the multiples. The target, the mean, is always the target from the extreme below by 1 or by 2. Give me 1 second here. I want to start something here, and I'm coming back here in 1 minute. Please bear with me. Testing 1 2. Testing 1 2. Testing. Testing. Not sure if my sound is on. Okay. Thank you so much for the patience here. Again, this is a perfect example of what I share with my subscribers here, that when you're trading completely, virtually, this is the issue. These are the problems. And unfortunately, we are at the mercy of technology here, since everything around us is pretty much related with the internet. So it's a good example here of setting up some contingencies, which I have in terms of setting up different stations and different computers and so on as a backup. But let's come back to the market here. Silver trading at 27.50. It's up pretty much unchanged almost. Now we're looking at the updated charts that we have here, and the data has been updated. So we're looking at the sell to level in gold to be at 1853.54. 1838 is the target. $18.45 is the sell one level. it was a good sign here today on the metals, at least in silver, that it's changing unchanged. And I think the gold market is going to be catching up here. So we're very comfortable where we are because we are, as I've been suggesting, my traders to put on a hedge, which is essentially synthesizing your position, or well, it's telling me I had a problem. Well, we know we have a problem. I've had a problem with TD Ameritrade this morning for some reason. I apologize, and it seems to be coming back online now. Let's go back here to TD, to Trade Station platform here. The robot of pretty much the variable changing price momentum indicator. 1833 in gold. Looks like market is moving towards that 1838. You can see clearly the market come down into the buy one, buy two level here and activate the confirmation pretty much of the targets of the buy one and buy two, and also of the reversion to the mean potentially unfolding from here. And this is a classic example of mean reversion trading. If you look at the chart, the market came right into the buy two level, which is the extreme, the B2 extreme below the mean, with a 95, with a 50-95 relative implied volatility to the mean. And it's a 2-to-1 factor. And it tells you when you come down here, if you short, you want to, your targets are 1822, and the market enters an extremely oversold condition. The reversion occurs when the price comes down and closes above it, confirming that pretty much this area found buyers, and that the buyers now are stronger than the supply being offered, and it's taken out all of this supply that is being offered here. And so this is the reversion occurring, and the target obviously is back up to the mean of 1838 once again. We have a little bit of a sell-off here going on in the E-mini S&P, down about 46 points. And it's come down right into that extreme level below the mean, and even activated now a buy trigger from the levels below the mean of 41.29. It's met the target here of 41.52, and it's trading in that blue zone that it identifies basically the area of the highest probability of buyers to show up here. The silver market completed the target of the mean of 27.57. And reverted a little bit down, activating now what appears to be a bearish price momentum. After the target is completed, it trading below the average activates a bearish price momentum. And it activates the targets below right away of 27.13.14. This is how the VCPMI activates the structure, whether it be from the mean to the B1 or the sell one above the mean, or even that B2 level below the mean, or the sell 2 level above the mean. So you look at the structure within, or you look to trade within the structure of the extreme above or below the mean, using the mean as a magnet for you to take your profits from the extreme below or the extreme above. We seem to have entered a trading range in gold. Before I talk about gold here, continue to hold on to your coin position that we establish as a long-term asset here. Let's take a look at the gold market here. And we can see the low to be 1769 of this move here. Even if we go back here to the Fibonacci retracement of 1671.70. I'm sorry. Yeah, well, it's 1671.70. This tested, the lows here. Made in June of last year. Tested it on March the 8th, and the last test was on March the 30th. And what you can see here if you can see the noise up here in red, and I know this may be a bit too confusing for some, but I'm telling you, this is a very clear picture of a combination of the daily, monthly, of all of the signals into this target zone. And what this tells me is that we came yesterday, after making a high of 1846, completed major targets up here. 1838, 1845, 48. And we almost got up to the monthly 1850 sale 1 level. The market putting in today what looks to be a reversal to the downside upon failure of this pattern, or continuation, you might say, through this high. What this confirms is that the supply expected up here, even on a short to intermediate or long term, has been validated. And particularly if we close below today negative on the gold, we're looking at a potential reversion unfolding, which could be of a greater magnitude. 1850 was the sell 2 monthly, and if we close below 1822 or even 1814, closing below 1814 is closing below the weekly average. Closing below 1822 is closing below the B2 level daily. Closing below 1809 is closing below the sell 1 level monthly. And so the close below 1809 somehow is telling us that if it was to close below there, then we're looking at a potential reversion unfolding that could come down all the way to 1758. So we're in a bit of a challenge up here, as I've been saying in my videos for the last few days. We want to be fading the rallies up here, taking profits up here, hedging, synthesizing until the market adjusts its volatility, its overbought condition into the blue zones, ideally into the blue zones. One of the things I'm noticing here is that we're getting a second day follow through on the stock market. And I want to point out to you that one of the indicators, obviously, that we are watching, which is the indicator, I believe, that kind of gauges, you might say, the interest that's happening in the, a tremendous demand occurring in lumber, for example, which relates to housing, which relates to construction and so on. It is coming down. It is coming down. We
we're looking at a potential reversion unfolding. Excuse me. Excuse me. And that is going to be a key to lumber prices, to construction prices, and just using a bar chart to indicate this. We're looking at a major second day follow through. The top could be in, and that could be potentially a significant indicator for real estate bubble that seems to be occurring, in that it'll take about a couple of months, I think, before it falls into, it affects, you might say, the wholesale market. But I'll tell you, this is a pretty significant reversal here that it's occurring, and it's occurring on the face of higher interest rates, which is really a significant development that is occurring, and that one is related to the other. You know, interest rates seem to have bottomed here once again, and it's showing a major reversal here, almost like a double bottom. And we saw a major reversal here after coming down and spike into a low of 147 from 177, reverted right back up, and now it seems that they're turning around up to 162. And this is taken, you might say, an effect on lumber, as interest rates rising is very bearish for lumber. It's very bearish for the stock market. It's very bearish for the real estate market. And so what we're looking at is the stock market reacting to this. And we can see the market reacting. This could be a major significant reversal here. An important reversal that I think a lot of people have been waiting for, and this is the second day follow through. So if it closes below the B2 daily and number, then we're going to be looking at the B2 weekly closing. If it closes below the B2 weekly, then you're going to be looking at the programs going neutral daily, going neutral weekly, and then it's going to be challenging to meet the targets below. the lower targets below. Yeah, we're getting continuous selling in the stock market here. So I think lumber higher interest rates is going to bring in a little bit of a deflationary move in the stock market. As well as some of these other bubbles that we have. And to a certain degree, it's a question of how is it going to influence gold and silver or the metals if we go into some kind of a sell-off and, or a panic sell-off like we did back in March of last year. It's important, I think, that we note what lumber is doing up here, because it's been an explosive indicator and a component of pretty much making up what this bubble in real estate seems to be happening here. We also are looking at copper, obviously 488, trading 488, almost getting up to 490, as also a leading indicator of what the economy is doing, and also obviously real estate, as it is a major component. But you're looking at almost $5 copper and per pound, and what we're looking here is at major spikes in pretty much basic precious metals for the economy. Copper, silver, gold. They have industrial applications as well. And with obviously what's happening here in demand, in the demand factor, with regards to supply and demand, as we move into the summertime here, we're beginning to see tremendous, again, shortages of just about everything across the board, from computer chips to, copper to lumber. And this is causing this massive, housing crisis, shortage, you might say. But if this is an indication, then I think we're looking at potentially the top. If lumber is making a reversion, you might say, from here, it could be a major indicator for the rest of the bubbles, you might say, in that sector, in the real estate sector and construction, that prices maybe have peaked. We look at commodity prices basically to anticipate future prices of pricing, commodities based upon the supply and demand. We got soybeans trading at $16 a bushel. I mean, corn and wheat are almost at $7.58 a bushel. You're looking at an explosive move in just about every sector. Soybeans trading 16.25. Corn trading 7.26. Wheat 7.40. 7.73 is the high. You know, it's almost doubled. They have almost doubled since March of last year, June, July of last year. And it's a matter of maybe 6 months, I would say, before the prices begin to enter into the retail end of consumers, and, you know, companies begin to, you might say, price the increase in wholesale to retailers, to the retail customer. So we're going to see a sharp increase, and we are already seeing a sharp increase in prices pretty much across the board. I mean, if you take a look at gasoline, it is an indicator as well of where we're going here from an inflationary perspective. But, you know, the one thing I'm concerned is that the Feds don't seem to think that this is a serious potential problem. They say it's transitory. Don't worry about it. You know, rates are going to adjust themselves. And I'm not so sure that we're dealing with that kind of complacency is good for the market here, because the danger is that if inflation unleashes a trend, it's going to be very hard to stop it. And for all intents and purposes, this pent-up demand that we're getting as we move back into the economy, obviously is pushing and accelerating the velocity of money to levels maybe that are going to indicate, you know, inflation has returned. As far as I'm concerned, it's been here. If you account for and factor in the old formula in the CPI, you know, you're looking at pretty much, again, 8 to 10% inflation rate. So I think you want to buy corrections in precious metals. Soybeans, you know, at 16.20, it's not deflationary. We're moving to $20 beans. Copper, 4.76. It's not deflationary. Commodities moving higher is creating the pressure for the 10-year note to be anticipating an inflationary cycle underway. So that's very bullish for the metals. And, you know, regardless of what the price seems to indicate right now, I would say to you that what you want to do is look to buy corrections into that blue level. Ideally into that buy one and buy two level. In the meantime, continue to hold, you know, your long-term core position that we've been building, suggesting our traders and subscribers in our private trading room, and use this, you might say, extremes above the mean to generate liquidity and buy long-term as the market comes down into the buy one, buy two level, and ideally harmonically. Thank you once again, ladies and gentlemen, for allowing me to share this information with you here. I hope once again that this is really making a difference in the bottom line. If you have any questions, please subscribe to us, call us, write us. We're here to assist you. In the meantime, you take care. Be well. I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Folks, John Najarian here with Steve Collegian, co-founder of Ticker Talker, and here we are.